ライン証券。
Hello again. I'm Pearlie Yap, the lead portfolio manager for the Asia-Oceania High Dividend Equity Fund. As many of you know, the fund has been around since 2005 and remains a flagship offering for Asia-Pacific ex-Japan equities for investors in Japan. I have been working on this strategy since I joined eSpring in 2011. I would like to share with you an update of the performance of the markets and what we expect for the rest of 2021. I would also like to highlight how our portfolio is positioned, especially to cope with the inflationary headwinds of almost all the commodity classes. As part of the discussion, I will comment on business opportunities in areas of renewable energy and plant-based protein, both topics of great interest in the market today and areas which we think are good exposure for investors. The second quarter of the year has been a volatile period for markets, though most of equity markets have delivered a positive year-to-date performance. Sentiment was buoyed by supportive economic data, including ongoing growth of exports from China, South Korea, Taiwan, and the anticipation of a stronger economic data as global economies fully reopen. Against this, there was regulatory noise in China, especially in the internet and education sectors, that evoked concerns. Investors also remained sensitive to inflation data and continued to grapple with fears that the Fed may tighten policy amid rising inflation pressures and a strong economic recovery. This can be seen in many commodities ranging from lumber to industrial metals to crude oil. I'll share more on inflationary pressures later. The stock market has a way of pricing in new information very quickly, and that's exactly what we've experienced in the month of June, as market leadership shifted away from value cyclicals to areas like healthcare and consumer. As investors, we like to look past the monthly moves and focus on areas of the market where we see sustainable long-term trends, irrespective of the Fed stance. But we are not out of the woods yet, and our team spends a lot of time thinking about what's next, what could go wrong, and where the risk to the recovery could be. Trade tensions, regulatory changes, climate change, implications of the ongoing coronavirus mutations, and market volatility are all top of mind. Our outlook for 2021 remains broadly optimistic, with vaccines and reopening propelling a cyclical rebound in areas in the market that were left behind in last year's internet-led rally. Most investors are aware of the spike in certain materials like iron ore, copper, and even semiconductors. The strong price spikes are in part due to supply limitations like COVID shutdowns and limited shipping capacity, which had in turn fueled speculation in general commodities. Now, we do expect that as markets open up, prices will begin to ease off from the peak of the second half 21, leading to lower inflationary pressures. In fact, the US Fed continues to see the recent rise in inflation as transitionary, and it is indicating a 2023 rate hike as the economy gets onto an even keel post-COVID shutdowns. This does give enough time for the markets to adjust and manage balance sheets and liquidity. Our portfolio has positioned in products that have high pricing power, like semiconductors and higher-end consumer products, with market share gains that would have provided good hedges against rising inflation. Cyclical sectors like energy and banks have also staged a strong comeback, which has benefited our portfolio. The important principle behind our investments is to buy companies that have fundamental support on valuations and strong business drivers that can lead to better earning outcomes, even in the face of higher input prices. One of the most significant of these long-term trends is climate change, as environmental issues are becoming more pressing across the globe. Investors and consumers are more conscious of our environment and social practices. Our investment team believes that no company can sustain long-term profits if short-term high profitability is delivered at the expense of the environment or society. There is also a stronger push by governments and stock exchanges for more disclosure of environmental data by corporates. We need to pay attention to these factors as stewards of investors' money and play our part to make the world more sustainable. Increasingly, environmental costs will rise through the introduction of carbon pricing, recycling, and disposal cost. In our investment process, we look closely at ESG factors and aim to identify stocks that are positively exposed to lower carbon intensity or which are taking steps to improve their environmental footprints. We think these types of companies will be long-term winners. For example, the Asia Oceania Fund owns a global leader in the renewable energy field, with more than 2,400 transition projects completed to date. Asia is typically considered a laggard when it comes to ESG, especially relative to more developed regions. However, we believe that the Asian region is poised to see the most improvement in ESG and renewables, and therefore poses attractive investment opportunities. We also know that our food choices can create a healthier planet. Conventional meat, eggs, and dairy production may be unsustainable and inefficient. It drives climate change, creates extreme environmental degradation, and may result in antibiotic-resistant disease. To sustain a global population, our food production must evolve to become more plant-based, as these foods have lower carbon emissions for every calorie of food produced. Global plant-based meat retail sales crossed the 4.2 billion mark in 2020. Around the world, more than 800 companies have business units focused on plant-based foods that directly replace animal production. We think this trend will continue to grow, and the Asia Oceania Fund wants to be a part of this. We own a global food business in the Philippines, for example, who innovatively uses 90% less land and produces 90% fewer carbon emissions than traditional beef in producing its plant-based protein mince. So at eSpring, we will introduce more ESG research to assess, engage, and monitor our holdings closely on these dimensions. And to wrap up, let me remind you of our approach in the Asia Oceania Fund. We have a skilled and professional team that are strong stock pickers and will look for the best opportunities for you. You can trust us to engage companies to ensure that they allocate capital to the best investments to deliver long-term sustainable returns that will in turn result in higher dividend payments. We also ensure that our companies strive to protect the environment, do good socially, and support shareholder interests. We are as excited as ever about the opportunities for the Asia Oceania Fund and think Asia has entered a golden age of technology innovation. Thank you for your time today and for investing in the fund. We hope to be able to update you in the future with more interesting stories and positive performance.